This is the Merrill Lynch Move Index. This is the Richard Turnell chart, Stephen Gallo. We're not seeing a correlative move in other markets. What does that mean to you?
Yes, for the most part, I think we have seen a pickup in FX volatility, but it's been very controlled and certainly nowhere near the size of the pickup in volatility that we saw in other asset classes. I think this speaks to the general fundamental backdrop, which has been influencing FX markets for the past 6 months. The first is that strong global growth has caused the dollar to weaken because it's raised the attractiveness of investments outside of the United States and apart from the U.S. dollar. And then secondly, you have a situation where the U.S. twin deficits is increasing. The fiscal deficit in the U.S. is increasing. It's going to continue to increase. And so this spells generally a weak dollar theme. The virtuous circle that took place during the middle of the last decade, which the dollar fed off of, the weak dollar fed off of, and also contributed to, is still very much intact in our view, despite the recent equity rout.
Okay, I want to tie that into dollar yen. Come back to the move index. Jason, pick it up again here, if you would. And what is so critical, folks, is this is the volatility of the yield curve. And yeah, it's moved up a little bit, but the VIX would be up here equivalent in the equity market space. Now, the way this is expressed, Stephen Gallo, is maybe dollar yen. Have you adjusted a strong yen call because of what we've seen in the last 72 hours?
I think most of the activity in the yen has been in the yen crosses because it looks like it's become very clear over the last few sessions that short yen was used to fund long positions in euro, in sterling, in CAD, and in Aussie. So there's been some unwinding of that, and that's led to generally a stronger yen. But dollar yen has been relatively muted because both the yen and the dollar tend to perform as safe havens when market angst increases. No, our fundamental view for dollar yen is still the same. We see it going to 104 in 12 months. This is largely going to be driven, in our view, by a weaker dollar and also strong Japanese fundamentals.